So we're actually going to dissect starting at here this week here. But before we get there, the first thing that I want to just acknowledge where we are in price, right? Just set some parameters. So first things first, I would like to note that the previous monthly low was here. So at the start of this week, which was here, this would essentially be my ultimate target, right? Because see how just inefficiently this price is here. So I could see that from a monthly perspective, what the algo is actually delivering in an overbought scenario. And then there's just no significant demand here that essentially sticks out that I would want to buy off of, right? But even besides the point of demand, the algo is what you must respect first, right? So let's just dive straight into it. So one thing I will like to note is that I do trade the smaller time frames, right? Which you will be able to do um, once we wrap this video up. But the reason why I trade the smaller time frames is because I like data, right? Um, it allows me to see, and then once you understand time and separate segments, you never get lost, and it'll all make sense, right? So just to jump things off, right? So the week opened here and price drops tremendously, right? Asia and London. One thing that I will like to note is that during this drop during London is just acknowledge how inefficiently price drops lower, right? No major sweeps in price. So from there, you can already see how the algo from a scalp perspective is delivering an oversold scenario, right? However, right now, the the narrative doesn't derive from here, right? The narrative derived from the monthly perspective. So we're essentially looking for harmony in that case. So from a monthly perspective, when the algo is delivering an overbought scenario and we're selling off, we obviously know that if we're down here playing in scalp territory, that all buys are temporary, right? And we're essentially looking for harmony for an overbought scenario, harmony for the algo to deliver harmony, for price to be overbought. So example would be like here in this inefficiency. Now, one thing I will like to note is that as price comes down in New York, we can see how price does sweep the previous monthly low here, right? But acknowledge how inefficiently price sweeps this previous monthly low as I have disguised here in this box here. And also then acknowledge how we go to the next H4 segment, which starts at the 13th hour, so from 1 to 5, acknowledge how inefficiently price sweeps the previous H4 low, right? Now from a fractal standpoint, this is where you find harmony because we can see how from a monthly perspective how inefficiently price has swept major sell side liquidity, right? So from a monthly perspective, we can see how inefficiently price has swept the previous monthly low. And now when we go from scalp to intraday perspective, we can see how inefficiently price has sweeping a previous H4 low, right? So then now we're finding harmony. So from a scalp perspective, the algo is now delivering an oversold scenario. So what's first target doing if you were to um, find some type of excuse to buy down here? Obviously, the most recent constant liquidity target that ran major sell side liquidity here from a scalp perspective, which would be this H4 low, would be this previous H4 high here, right? And as you can see how London comes up, sweeps this previous H4 high, and we trade back off. Now, the thing to note here is that how inefficiently price does so. And if we bounce back to a scalp perspective, this is where you can see that the algo is shifting, right? But it's harmonizing with the monthly bias, right? So from a monthly perspective, we've just swept major sell side liquidity. Now, from a daily perspective, This right here becomes the previous daily low. And now we've swept the previous daily low, but just acknowledge how inefficiently we've done so, right? So this acknowledge the inefficiency of this entire drop here, right? How inefficiently we've swept the sell side liquidity of the previous daily low. So now from there, I can see how from a swing perspective, the algo was delivering an oversold scenario here. Now I see how from an intraday perspective, the algo is now delivering an oversold scenario here, right? How inefficiently price is sweeping um, the, the the major sell side liquidity for the day here, which would be the previous daily low, right? Now, before I go any further, this blue box where I have the body, and this is one key part is just as far as acknowledging where you are in price, right? So this daily candle here open here. All right, so the open of this daily candle is here, right? Which essentially means that as price crossed this line here, the body of this daily candle actually starts printing from here down. So this right here is the body of this daily candle. Now, one question to ask yourself is that if I'm anticipating price to continue lower from here within this body, is there any major supply present, any significant supply present for me to actually sell off of, right? Also, you have to acknowledge what the algo just delivered in terms of price. So from a monthly perspective, the algo has delivered an oversold scenario. Now from a intraday to scalp perspective, the algo has delivered an oversold scenario, right? So now I'm finding harmony with the algo. Now from just the anatomy of price alone, right? There's no major significant supply present. There's no major significant supply present for me to sell off of. Now, also, if we back up, what we have to note is, remember the buy side liquidity that's building at this H1 high here. So now another question to ask is that, and at this time in the market, at this time during New York in the market, this here would be your current daily high, which actually still respects this H1 high, right? So during this time in the market, the question to ask yourself is that, for one, if I'm anticipating price to go lower, where would it actually be moving lower from, right? Is there any major significant supply within the body of this candle to hold price lower? No. Another question to ask yourself is that, okay, is the current weekly high is here. So from a weekly perspective, the algo has traded down very inefficiently and swept a previous monthly low, right? I see how price is harmonizing from a monthly all the way down to a weekly perspective, right? And also from a weekly perspective, I'm acknowledging that this here could potentially be, this here could potentially create the weekly low. Now, what's also a key thing to note in this is that these red lines represent a 2-day segment, right? So now, not only from a daily perspective here, but from a 2-day perspective, right? Because if we went to the 2-day chart, this right here is one candle. So from a 2-day perspective, what is significant about this high here to hold price and to make this candle, this 1 2-day candle here, close bearish, right? And there's nothing. Now I'm gonna take a second. Clean some of this stuff off here. Right? So there's no major supply present to hold price lower. So now I can tell that from an intraday perspective that the algo is now delivering an oversold scenario, right? So even if I had not traded none here, which there was opportunity, and in this part of the video, I'm not going to actually talk about entries and things of that nature. But if I had not traded none here, then I now know that from an intraday perspective, what the algo is delivering. So as I approach Wednesday, I'm looking for harmony. So down on these smaller, well, this time frames, we don't get no smaller than this, right? But from session to session, I want to see the algo and become aligning with this, right? And which we have here. As we can see, from London, from the end of London to New York, right? So at this time in the market, at the body of this 2-hour candle, we can see how London essentially comes up and respects it. So, right, so now we can see there's major buy side liquidity building here. Now, one thing you want to know about fractalness is that this here, the way liquidity is building here, is the same exact fractal play as the way liquidity is building here. So to some extent, you can ask, well, is liquidity fractal? Well, that just goes back to show that with it all being math, you can't bend math. So to some extent, liquidity is fractal as well, right? But nonetheless, so I can see how the buy side liquidity is essentially building there. But now from an algo perspective, what is the algo delivering, right? So at this time in the market, if I'm acknowledging this, let's just set some parameters, right? So this right here would be a current daily high. Now from 5 to 9, you acknowledge how price trades down and how inefficiently we sweep the current H4 low. Now from the 9th hour to the 13th hour, which is the next H4 candle, acknowledge how once again we get the same exact fractal play from H4 segment to H4 segment, and acknowledge how inefficiently price trades down once again, and within this next H4 segment, how inefficiently we sweep the current H4 low, right? Then once we approach the last 4 hours of the day, right, which was the 13th hour, acknowledge how inefficiently price trades down here, and we sweep the previous H4 low. Right? So now I can see how, from a scalp perspective, going from H4 interval to H4 interval, how the algo is delivering an oversold scenario. From here, I now see how this here is now harmonizing with my narrative here. It's the same fractal play, just from a smaller scale, right? From here, we went from day to day, intraday. From here, we go from session to session, or in this case, H4 segment to H4 segment, so scalp, right? And then from there, we acknowledge the algo squeezes. We deliver an oversold scenario, and then price expands. Price expands to the upside. Now, once again, price expands and does what? Price expands, and now this daily high still comes in once again and respects this H1 high here. So now acknowledge the liquidity sitting here at this point, at this time in the market. This H1 high here is still being respected by this previous daily high, and now we have this previous daily high in this case here. So there's a major, I can tell that where price is building major buy side liquidity is essentially building here, right? And at this time in the market, and at this time, during this time in the week, right, is that another question that you essentially have to ask yourself is that it's now Wednesday, right? Now, this H2 candle has now closed bullish, right? Which was anticipated. But now from this standpoint in the market, right? The question to ask is that when we go to talk about this next day here, first thing I want you to acknowledge is how this day here will set up as the same exact fractal play as this entire week, right? So we have major buy side liquidity building here. We have the previous daily high, which was here, and now price opens up in Asia. We have the current daily high here, right? And price sells off significantly, right? So now from this case, I still have the same narrative is that okay, so now from this case, I still have the same narrative. I'm looking for the algo to deliver oversold scenarios, right? So in this case here, what takes place, right? So Asia trades off very inefficiently. Now this first drop here, let's acknowledge it, right? So price drops significantly and acknowledge the inefficiency of this drop. Now, in this case here, I'm not going to actually talk about entries and things of that nature. But one thing I want to discuss is like the same ideology I used with the H2 when I went to talk about the body of the candle and acknowledging where you are in price, right? So in this case here, a buy here, you could get creative with a buy here and target this H4 high here. Why? Because for one, I can see how we went from hour segment to hourly segment, right? So from 1 in the morning to 2, this is 1 hour segment. From 2 to 3, we went from hourly segment to hourly segment, and I can see the respect here, right? So therefore, I can see where buy side liquidity was essentially building in the market, which is here. Another thing to note is that within this H4 segment is that this H4 candle opened here, right? Meaning that the body of this H4 candle is here. So one thing to ask yourself is that if I'm anticipating price to continue lower from here, there must be some major supply post the body of this candle here to actually hold price lower, right? And there isn't. There isn't. The only supply presence, you can see this here being the supply, right? But the only thing this does is cause a reaction to then create a higher low. In this case here, higher high, higher low to then drive price higher to go run this H4 high, right? So from a scout perspective, this is the part. This is the beauty of the algo and understanding timing, right? So taking a buy here, some may say is that, well, why wouldn't I not anticipate this buy here to go be the buy to create the low of the day to go run major buy side liquidity? It's not that you don't necessarily anticipating it, because taking a buy here, you can actually anticipate price to come run here. Why not? Right? But the thing is to notice that you have to follow the algorithm, right, and acknowledge how price responds, right? So from here, as we approach this new H4 segment from 5 to 7, we can see how this H4 candle essentially opens here, right? And how inefficiently price trades up to go sweep this H4 high here. So from a micro scalp perspective, the algo is delivering an overbought scenario here. So this right here was harmony, right? Was essentially harmony with the overall narrative of what we're looking for in oversold scenario. But however, now the algo is delivering the overbought scenario. So from a scalp perspective, you could take a quick sale here, right? You could take a quick sale here because we're only trading the algo. And in this case here is what we have to understand is that, okay, so from a time perspective alone, is that if I'm anticipating this here to essentially create the low of the day and for price to continue higher, was time necessarily in favor for the H4 low to be printed within the first hour of this next H4 segment? And that's not to say that it cannot happen, right? That's not to say that it cannot happen, but the objective is to not try and predict or not try and just be so caught up in this has to happen and just flow, right? But so nonetheless, as we can see, price trades up very inefficiently, but the main thing to note is the inefficiency of this drop here, right? So from here out, inefficiently price drops, we sweep the previous H4 low, and then from there, price runs. Now, what's the beauty in this, right? So the beauty in this drop alone is that I want to take all that stuff off. So it's time. So if I put the 7th hour on here, right? So within this 4-hour segment from 5 a.m. to 9 a.m., this now is perfect timing to create this H4 low, right? Because for one, it's the last 2 hours of this H4 segment, right? And within the last 2 hours, the algo is delivering an oversold scenario, right? Now, what's also perfect timing for whale is that if we look at just from a hourly standpoint, from 7 to 8, if I'm anticipating this hourly candle to close bullish, this would be perfect timing for this H1 low to be printed because it's within the first 30 minutes of the hourly segment. Right. So from a time perspective, this is perfect timing. This is perfect timing to print within this H1 perspective. This was the perfect timing to print the 30-minute low. That sucks. That 3 sucks. But the 30-minute low, the H1 low, and also from a 2-hour perspective, this is now perfect timing to print the H2 low. That's 1, right? And then another thing that you have to acknowledge is that from a, let me get rid of this right here. So is that from a H4 perspective, is that if this H4 candle essentially opened here, what's actually taking place right now? We know that right now, the only thing price is doing is essentially creating this H4 wick. Everything being printed down here is creating this H4 wick. Right? And from there, what does price do? Price expands, but not only do we expand, but we go and expand and we run the current weekly high. Here. This here, the current daily high, this here was the same fractal play as this entire move here. Because from a weekly perspective, we how inefficiently the algo delivers an oversold scenario to sweep the previous monthly low. From a intraday perspective, acknowledge what a current daily high is and how inefficiently price delivers to sweep the previous H4 low. Both constant liquidity targets, right? So there you can see the harmony and also the fractalness of the market, right? Even from here, from if we talk about H2 segment to H2 segment, and this essentially being the high of this H2, right? And how inefficiently we sweep the previous daily low. It's the same as that fractal play here is how inefficiently price went swept the previous H4 low. Right? And then price trades off and we sweep the current weekly high here, but now acknowledge what the algo is delivering. Right? So now we approaching Thursday. We are approaching Thursday. Price trades up very inefficiently here. Let me clear some stuff out. Okay, so price trades up very inefficiently and we sweep the current weekly high. So now what does the algo deliver? The algo is now, from a weekly perspective, delivering an overbought scenario, right? So now this weekly perspective now becomes my narrative. Now, the cool thing about this is that we're on Thursday and Friday, but now we're in another 2-day segment, right? So one thing to note is the anatomy of price within this 2-day segment is pretty much is how we can see how this 2-day candle opens here, right? So the body of this 2-day candle starts from here. And the question to ask is that within the body of this candle, right? So Thursday closes, the high of Thursday is printed here, right? But is that within the body of this 2-day candle, if I'm anticipating Friday to continue bullish, what major supply is what major demand is present within the body of this 2-hour candle to actually continue to drive price higher? And if you acknowledge, if you look at this, there isn't any, right? The only demand present here, which was here, which caused the reaction here during London, right? But then acknowledge how inefficiently price trades up to go sweep the previous H4 high. So now here, from a scalp perspective, scalp is now in harmony with intraday. Right? You can acknowledge how inefficiently price trades down. One here, price trades down and we sweep this H2 low into this demand, the only demand present, right? But the only intention of this mitigation was to go create a lower high to then drive price lower. That was the only intention of this. Now, from a time perspective, right, this was perfect timing for price to roll over. Why? Well, for one, we were in the last hour of this H4 segment, right? Between 1 and 5, between 1 a.m. and 5 a.m., we were in the last hour of this H4 segment, so the New York hour, right? So it's perfect timing to create this H4 high, H1 high. From a structural perspective, we want to talk about structure. It's perfect time to create, from a scalp perspective, create a lower high, right? So from time. So there were a lot of confluences just from time alone as to why this was perfect timing for price to roll over, right? And the cool thing about is where this day closes, right? Price runs back to the open of this H2 body here. Price runs back to the open up here, and we close. Right, the lowest printing price closes off. Right now, until still trading this from the day-to-day basis, right? So before we go into the next week, I'm gonna go back and recap some things, right? Some trading the algo from a day-to-day basis is that from a weekly, you start from a monthly, weekly to the daily, right? So from a weekly perspective, since the algo is delivering an overbought scenario here, right, with this inefficiency here, I know that buys for me is as long as this right here is maintaining, right, the only thing I'm looking for is sales. Now, that's not to say you cannot buy. You just know that buys during this time in the market are temporary, right? For example, you could execute a buy here, right? Right off of this point of interest here, you could execute a buy, right? And then from there, you would just target, the most recent constant liquidity target, which would be the previous H4 high. Now, in this case, it would be the current H4 high here, right? But post running this current H4 high, there would be no major demand supply here present for me to even want to sell off of. So I would target that previous H4 high, right? And another major confluence of this buy here, if you were to take this buy, and just get creative with your entry in some way, shape, form, or fashion, right, is to note that this H4 candle from one opened here, right? So the body of this H4 candle was actually here. So from here, if you're anticipating price lower, from here, then this here would essentially be the high that price would need to respect, right? If you want this H4 candle to close bearish in this case, then that has to be the high that price respects. And then acknowledging that has to be the high that price needs to respect. And that's you can ask the simple question, well, is there what major supply within this body would there be for me to sell off of to actually drive price lower? And there isn't any. All right. But without even acknowledging that's just that is just more confluence. Knowing, understanding the anatomy of price just adds more confluence to the algorithm. Without even knowing any of that and just understanding the algorithm, you could be able to acknowledge that price is delivering an oversold scenario here, right? And it's time for price to roll over. Now, and from there, that is one weekly cycle of price. And within this weekly cycle, we were able to anticipate the potential weekly low, right? The potential weekly high, right? Only because we acknowledge what the algorithm was delivering in correlation to your constant liquidity targets, right? Always acknowledging what the algo is delivering in correlation to constant liquidity target. Now, everything else is just a plus. Everything else is, for example, this 2 day segment, for example, is just acknowledging where you are in price. And it, like, for example, this body here, and just acknowledging that if I'm anticipating price lower from here, like if I want this 2 day segment to essentially close bearish, that I'm anticipating it to close this right here needs to be the high to essentially hold price bearish. And this is the body of this 2 day candle to do so, right? So that understanding the anatomy of just candles alone adds more confluence to the algorithm, right? So acknowledging what the algo is delivering first, everything else is just a confluence to the algorithm, right? Because the algorithm must respect itself. Remember, the DXY is one big math formula, and you cannot bend math, right? Which is why you get price, which is why from a fractal standpoint, you are able to see how price correlates all the way from a monthly, weekly to a daily basis. And then from there, you find the harmony, right? For example, here, just to recap, for example, here, how we could see from day to day is previous daily low here, how inefficiently price sweeps that, right? And then so from there, now we approach the next day here with this being our narrative, right? So from there, I understand that if this is narrative, I'm just waiting for price to fall back in harmony with that, and it did so here, right? You understand that sales, if you were to sell anything in here, you understand that sales are temporary, right? Sales are temporary. And then from a liquidity standpoint, just acknowledging how liquidity essentially builds the same exact way. Right from here, how we could acknowledge that we had this H1 high here, right? And we had this previous day high here, how the buy side liquidity building here, right? We can acknowledge how this minor high here, which was essentially protecting the body of this H2 candle, and how this current daily high comes here and respects that. The way the liquidity was building here is the same fractal play as the way liquidity was building here. It's the same exact fractal play, right? The way liquidity was built here, the respect of this is the same fractal play as how liquidity was built between this previous daily high and this daily high here. This and this, the same exact fractal plays, right? And which is why when you get the algo scrunching like this and all this liquidity essentially building here, that's why you get these nice explosive moves like this, right? But it's all remembering that it's all math. So speed in most cases signifies exhaustion, right? A lot of people see the charts and speed scares them because, or they fear they missed something, or how many times have you seen an impulsive move like this and thinking that price is breaking to the upside, and you're trying to find some demand here for price to come back and buy off of. And I'm not saying that in some cases it does not do that, right? But in respect to this demand, if that's the case, then the algo has to actually show that, right? Like, for example, here, we can acknowledge how the algorithm, as Friday closed, how inefficiently the algorithm trades and sweep this H4H, and we jump back into the body of this, right? So therefore, Now, from a day-to-day perspective, which I'll get into once I actually approach the next week, is that we'll be able to see how now, from a scalp perspective, the algo is not in alignment with this. So I understand that as I approach this next day, buys are temporary to target this, right? This here is my overall narrative, but this is my overall weekly narrative, but from an intraday perspective, price isn't aligning with that just yet, the way price closes here this Friday. Right? And from a weekly perspective, also another thing to note is that from a weekly perspective is that price opening here, right? So price opening here, right? So we understood that all of this was essentially the body of this weekly candle, right? Now the question to ask is that in this case, so if all of this is body, and I'm expecting this week to close bearish, right? Which it did, right? The week did close bearish. The week did close bearish here, right? But at some point in time, the high and the low of the week have to be printed. Now, in this particular case here, considering the fact that we could see that the major buy side liquidity for the week was building here, post price running that, would there be any major supply present here for price to sell off of us? Well, if we just acknowledge the very first thing we said as the week started is how inefficiently this traded down, right? There are no major sweeps. So for me, from a liquidity standpoint, is that if this right here was the most, if this right here was the most post running this, and this right here was the next constant liquidity target, which would be this H4 high here, that actually went and swept major sell side liquidity, this would have to be a target for me. There's no major supply here to actually sell off of. Right? No major supply for the sell off of. Right? The only supply that was present, which was here, the last up push before the down. And price does trade into that. Right, as we can see, if we draw this across, price did trade into that here, right, with only the intention of creating these higher high, higher low, price continues. So it did give a reaction, right? But not at this point in the market, is pretty much saying is that, okay, if I'm anticipating this supply to hold, then that means this high is the last high to respect the body of this weekly candle. Right. So even from a probability standpoint, is that, okay, if this is the current weekly high and this is the current weekly low here, in terms of probability, and I'm hearing price, which one is more probable to get ran? Just from a game of probabilities. If I had to bet my odds on either one of these getting ran at this point in the market, I'm siding with this here. right? So just from a game of probabilities, odds would be in your favor for this here to get ran, right? But from there, the beauty of all of this is when you acknowledge what the algorithm, and I'll say this, a lot over and over and over again, is essentially acknowledging what the algorithm is delivering in correlation to your CLTs, your constant liquidity targets, right? Acknowledging what the algorithm is delivering in correlation to your constant liquidity targets. Acknowledging the anatomy of price, right? During these sweeps, right? Breaking these intervals up and acknowledging the opens of like the 2-day segments, right? And acknowledging where the body of these segments starts, and acknowledging the catalysts that create the bodies. And is there any major supply or demand present, right, in these catalysts, right, to actually hold price lower? All of these are just more confluences alongside the algorithm, right? From there, when you put all of these confluences with the algorithm, it makes price makes a lot of sense. It make executing easy, right? Because you understand where you are in price. You understand time and timing, right? So this right here was a weekly cycle. And before we start the next week, I'm gonna wrap this segment of the video up. The main key thing to take away before we go into the next week is just remember that from a weekly perspective, we're going into the next week with this right here being the narrative and what price actually delivered here, an overbought scenario, right? So you can essentially approach, and then from a weekly perspective, the output's living overbought. But now from a intraday daily scalp perspective, the algorithm is delivering oversold scenario. So going into the next week, you could essentially approach it. You know what you're looking for from a weekly perspective, but obviously, scalp has to align first, right? So therefore, buys are um, buys are what's the word for? I just want that buys are temporary, no potential until price proves otherwise.